Hey, this is David Miller with the Miller Group of Keller Williams Realty. I'm here to help you get real estate smart. All right, so this is another part of the series where I'm interviewing an expert on how to help you during the virus here. So today I'm interviewing Jason Rutland, and he's one of our preferred lenders, and he's going to be sharing with you if now is the right time to refinance your property. Hope you enjoy it. And I'm here with another expert in the field. I have Jason Rutland, and he is with Premier Home Funding, and he's been a lender for the past 18 years. So since COVID-19 has come out, the interest rates have done a lot of dancing up and a lot of dancing down. So I thought it makes sense to bring Jason in right now to sort of get a feel for what's it been doing and where it's heading, and then his thoughts on where he feels it's going to be taking all of this here. So Jason, first
Yes.
question I have for you. So when the COVID virus first came out a couple weeks ago, and people were just becoming aware of it, and they started clamping stuff down, what happened to the rates?
Well, everyone heard the news that the Fed initially lowered rates by 0.5%, and then the Fed lowered rates to 0 or 0.25% in that range. And everyone thought, oh my gosh, I'm gonna go get my 0% rate on a mortgage. Not quite the same thing.
So it doesn't work that way. So there's not like free money out there to buy a house?
Well, I mean, not for us, but for the banks in a way. The federal funds rate is an overnight borrowing rate for banks. So they're borrowing it from the Fed at that low rate. And then they lend it out to us at a higher margin so they can still, be productive in what they're doing. But initially, rates skyrocketed. Most people think they dipped. As coronavirus was hitting, that's because in the beginning we called it coronavirus. But in the beginning, they were dipping as the market was tanking. And the second the Fed did what they did, they skyrocketed. We actually saw rates go from around 3.5 on a 30-year all the way up to over 5.5 in about a week. Yes.
Wow.
Yeah. And by the end of that week, I think that was on a Tuesday, it hit over there. By Friday, it was back down to the low 4s, and we're back into the mid 3s again. So excellent 30-year fixed rates right now.
Okay. So very fluid, going up, going down. Obviously we're still in the middle of the virus here. Do you expect that to continue?
Yeah, we still see some pockets, and what we're doing right now is if it makes sense for someone to refinance, if they have a rate that's probably 4.25 or even 4% and higher, start that conversation with your mortgage lender right now. Give someone a call. We believe that rates are going to continue going down over time. It could be that they're going to pop up to 4, come back down to 3.75, hit 3.5, back up to 4, and then maybe 3.25. You're going to see it up and down in quick movements, very quick movements. So if your application's in and ready, you can get moving.
So if you get the application in, are you able to lock in rates?
We are, but you need to get the application in. Some lenders are actually even changing the rules a little bit. Their credit lines are so limited, they're not allowing you to lock in a rate until they have you completely approved, which is throughout the whole process. We're not doing that because there's a danger. If you know that you have a great rate right now, lock it in. You don't want to wait 30 or 45, or some of these lenders are 75 days to lock in a rate. You don't know what the future holds. You want to take advantage while it's there.
Okay, so it depends on your lender. So if you do have the capability to lock in and there's a low rate, do it. Because it's so volatile that that 3.25 could turn into a 4 very quickly then.
Very quickly. And programs are starting to kind of clamp down a little bit. So lock it in if you can do it.
Okay. So concerning the type of loans out there, I've been hearing, and I even read over the weekend that a lot of the bigger banks are starting to clamp down, require higher FICO scores, maybe even require a larger down payment, some up to even 20%. Can you sort of share what you're seeing out there?
The simplest story, if I could give a quick analogy, would be think like it's Thanksgiving and you've got all the food that's in front of you, right? You've already eaten everything. You're pretty full, but now you still have 6 pies and 7 cakes and 8 different kinds of cookies. You can't eat all of it. You can only eat what you really want. What do you have room left over for? So you're going to choose the one or two favorite things that you like, and that's all you're going to do. Banks right now, there's so much in this market, so many people refinancing, that there's so much supply of mortgages that some lenders and some banks are saying, we only want the cream of the crop. We only want the highest credit scores, the largest down payment, lowest debt to income ratios. So they're only taking this little sweet spot. There's still a lot of lenders, a lot of brokers that are still able to do a lot more. So if you're not all the way up here, there's still a home for you. But some banks are very limited in what they're offering because they just want to take the sweetest stuff.
Gotcha. And they want to limit their liability, I would assume, as well.
Yeah, and it's a smart strategy. You know, we have some difficulties out there for some of the banks, so they got to limit their downside.
Gotcha. Now, so if somebody were to refinance their house, what are the typical closing costs? I know it probably depends on the cost of the house, but on average, what would you say is the average closing cost? And is that money out of pocket, or are they able to add that to the loan amount?
Great questions. Typically, it's just under 2% of your loan amount.
Okay.
That's a general theme for a refinance as to what it would cost for closing costs. There's a particular mortgage company that likes to rock it in some way, but they like to charge a lot of points. See what I did there? But they like to charge usually 1.5 to 2 points, and they add that to your closing costs. So I don't recommend a lot of those strategies right now. You're wasting your money just to buy down the rate. It's already an excellent rate, and you're getting a small little benefit out of it. To answer the last part of the question, you can pay it out of pocket, but most people just roll it in. And my recommendation, just from doing so many refinance over the year, is if you can get that math to work where the cost of the refinance and the savings you get from the monthly is basically wiped out within 30 months or less, it's 2.5 years, it's a good decision because you know you're going to live in a home for 3 years or longer.
Okay. That was my next question. Is I've been telling people that it depends on how long you're going to be staying in the house. So you're saying if you're going to be staying in the house for at least 2.5 years, probably makes sense to do it. If you plan on moving next year or within 2 years, you're not going to get that savings back then. Is that correct?
Exactly. And I just don't do it. I mean, it's great. You can save maybe $300 a month in your monthly payment, but if you're going to pay $6,000 to move in 12 months, you didn't get the money back. So don't do it.
Gotcha. Okay.
Yeah.
That makes sense. All right. Last question here. What are some good reasons why people should want to refinance right now?
Great question. There's really 3 reasons someone would want to refinance. One, just to lower your payment. You know, you've got a good loan, but you just really want to lower your payment and save some money while you can. Second reason, you're trying to pull cash out. You either want to pay some bills off. We don't love that, but I understand that sometimes it does make sense. The bigger reason someone pulls cash out is to improve the home. That I have a lot, you know, you're improving your home. The value should improve as well. Makes your home more marketable should you sell it down the line. The third reason is you want to take your now 26 years left in your loan and knock it down to 20 or 15. So shorten the term. Those are the 3 best reasons typically to refinance.
And if you do shorten the term, you usually get a better interest rate as well, don't you?
You do. I will add one caveat, a little technical thing in here. We see that the Fed is buying so much in mortgage-backed securities in the 30-year coupons that it's actually making the 30-year really close to the 20 and 15-year. So in a lot of cases, it makes sense just to take the 30-year loan. And if you want to get aggressive with it, you can choose to pay more and still pay it off in 15, or you can do the smaller payment and do the 30-year.
Right. Makes sense. Well, Jason, I really appreciate your time. Thank you for sharing your wisdom to everybody that we're going to be talking to here. And I'm going to have Jason's contact information down here. So if you are going to be in your house for 2.5 years and your interest rate is more than 4.5%, you might want to pick up the phone and give him a call. We've done business with Jason for quite a while. He definitely is one of our preferred lenders. And of course, if you need any help with your real estate needs, our contact information is below as well. We'd be glad to help you out. Thanks, Jason.
Thanks so much, David. Have a good one.
All right, you too.